opened down about a point. We had a buy climax yesterday. It reversed down right below the December 12th high. We, on the daily chart, the stock market crashed in December, and the top of the crash was the December 12th high, and it's just a little bit above yesterday's high. I've been talking about this as probably the highest of the reasonable targets from the December 24th reversal. And typically when you get a reversal, the market goes to the top of the most recent sell climax high, which is here. If it gets there, and then it looks at the next one or the next one. We might get all the way up to the November highs without a pullback, but I think we'll pull back first. And I think we'll pull back from around where we are. So we're in a zone now where traders will look to sell, bulls will look to take profits, and bears will either short or look to buy puts. I am probably going to be buying puts or put spreads sometime either today or next week, somewhere around this, so somewhere around where we are, around that December high. Climactic end of the day yesterday, so you get exhausted bulls. Exhausted bulls typically take profits. That's what took place here. The bears are hoping that we get a bear trend out of this. However, I suspect we have to test yesterday's high. Yesterday was a big day on the daily chart. Today's opening within yesterday's range. There's an increased chance that today will be an inside day. We're at a key price. The market tends to move at key prices. Two possibilities are we get a double top bear flag. We're in a bear trend. The bears want a double top, break below the neckline, measure the move down. Even though that is very unlikely, it's still possible. Right now, maybe a 20% chance of that. If we start to reverse down strongly, then it becomes 30, 40, 50, 60%. But right now, only a 20% chance we'll break below the neckline and fall for a measured move down. Odds are probably 60 or 70% that we're going to pull back down to somewhere in the middle of this January rally. So the February last year low would be an obvious target. We do not have a top here yet. I think we're going above this high, but I do not think we're going to go above that high without pulling back down here first. When you have a buy climax at the end of yesterday, there's about a 75% chance you're going to have at least a 2-hour trading range that begins by the end of the second hour today. It may have already started here. The bears want 2 legs down, 1 pullback, 2. The bulls want a bull flag. Double bottom here, maybe a couple legs down, 1 pullback, 2, and then bull flag. Yesterday ended with a 10-bar tight trading range, neutral. Limit order market. Odds are either today or the next few days we're going to test that December high again, and I think we'll probably go above it. But odds also are that we're going to top out around that December high, around 2,700 or so, and pull back 100 points, maybe 200 points over the next month or two. I think the market is going to lose volatility. We had extreme selling and extreme rally. Now the bars are starting to get back to normal. And if we do sell off, I doubt it's going to look like that. I think it'll probably look more like this, kind of an endless pullback. Right now, it's more likely than not that we've seen the low of the next couple of months, and that this is the first of 2 legs sideways, 2 up. So we sell off. The bulls want a higher low major trend reversal and a resumption of the bull trend. Higher low major trend reversals, any major reversal, 40% chance of becoming a new opposite trend. So even if we sell off and form the higher low, only 40% chance we're going to go straight up above the high of last year. 60% chance we'll get a second leg sideways, 2 up, but that will probably stay sideways for several months. I think the market is in a big trading range, and it started back here, and we went to a new high, went to a new low. We're back in the middle of it. And I suspect that we're probably going to stay in this range for several months, possibly all year. We were sideways here for several months, sideways here for several months. I could see us staying sideways here for several months again. So we're starting to reverse up from 75, but not much momentum and pretty good sized pullbacks. One is another high one bull flag, like 77 and 80, but this looks more like a limit order market. So sellers above, buyers below. Most traders better off waiting for a good buy signal near the bottom, or a good sell signal near the top, or a micro double bottom near the bottom, a micro double top near the top, or a strong bear breakout or a strong bull breakout. We do not have any of that right now. Right now, we have a continuation of yesterday's range. Last week was a doji. That increases the chances that either this week or next week will be a doji as well. On the weekly chart, it's a buy signal bar, but buy climax at resistance. We triggered the buy by going above last week's high yesterday. But when you have a doji buy signal bar, usually you do not get a lot of buyers above, and therefore the entry bar, which is this week, is usually not a big bull trend bar. Tomorrow, the market will pay attention to weekly support and resistance, and the two obvious prices are the December high, last week's high. We have a spike pullback channel, so the beginning of the channel, the 56 low, is a magnet. We have a buy climax. The buy climax low and the 60-minute moving average are magnets below. Right now, I don't think we'll get there today, but one or two big bear bars, and then it will become likely that we'll get there. If we do get a 50% correction in the E-mini, somewhere down here in the middle, some stocks will make new lows. Other stocks will not. The stocks that look like this, they'll form a higher low just like the E-mini, but weaker stocks will probably get a new low. And that would be a divergence, an inconsistency that would lower the probability of a continuation of the bear trend. It would increase the chances that we've seen the low for the next many months. Will the bull trend resume? That high is such an important target. You can see we went up to it in a climactic way, and we could not even get a micro double top. Traders were so eager to sell, but we got so close to it. I think we'll have to test it again today or tomorrow. Bulls trying to get a credible buy signal bar. Important magnet above yesterday's high and the December high. So this is a possible low of the day. You're in the middle of a tight trading range, and there's room to the bottom of the range, and therefore stop entries are not high probability. Selling below one is a bear bar, and we have a lower high major trend reversal, but it's a doji, and you're selling in the bottom of a tight trading range. Probably more buyers than sellers below. This is a possible low of the day, but a similar problem. You're still in a tight range. It's an okay swing buy for a possible low of the day, but the probability is not very good, and therefore it's not a good scalp buy. On the open yesterday, we had a good buy signal bar 2, did not trigger. Good buy signal bar 5 did not trigger. Today, we have the same thing, a decent buy signal bar 2, and so far it has not triggered. Can you sell below 2? No. You're selling below a bull bar at the bottom of a tight range. Yesterday, bear selling below 2. I would not sell below 2, but with the big bear bar 3, traders would start to sell below 3. Also, that was a gap up, and there were magnets below. Here, we're at the bottom of a tight trading range. This has a lower probability leading to a sell-off. Globex range is small, and we're near the bottom of it. 90% chance we either go below it or above it. Sometimes we do both. Sometimes we go below it and above it, especially when the range is relatively small. Still a swing buy above 2. Most of the bulls who buy above 2 will probably be disappointed and they'll end up scalping. And for the bears, is it a swing sell below 3? Well, that would be the second sell signal of the day. Below 1 is the first. It's possible that we've seen the high of the day, not likely, but possible. And therefore, it's a reasonable sell below 1, below 3, but I would not take them. I would wait to see if we break strongly below the tight trading range and then look to sell, or look to sell higher. The market often does similar things on consecutive days. And we had bull bars 2 and 5 yesterday. The market broke below the bars, not above. The bears are trying to do the same here, but this is a tight trading range, probably buyers not far below. This is the second sell signal below 3, but I think not a very good sell. For the bulls, it's still a buy above 2. Looking for a test of yesterday's close, looking for a test of yesterday's high. Well, probability not high enough for a scalp. Market's testing the Globex low. It's deciding whether it's going to go below the Globex low or reverse up and try to get above the Globex high. Can you see it's exactly 5 ticks above 2? What does that tell you? It tells you that there are a lot of sell orders 5 ticks above 2. And who put those sell orders there? A lot of the bulls who bought 1 tick above 2 decided that it's not a particularly good buy setup and they're looking to scalp for 1 point. And you have bears who know that we're in a tight trading range in a limit order market, and they sell the 3 high, a bear bar, and they place orders to sell 1 point higher, 2 points higher. So you have bears selling as well. The limit order bears made their money. It's still on the buy above 3, but not a very good buy. I suspect the bulls will make at least a point. We're so close to yesterday's close, we should get at least to yesterday's close. For the bears, micro double top, up on 2, down on 3, up on 4, and they're still trying to break below the Globex low. Testing yesterday's close, testing the lower high of 81, and we might get up to that December 12th high. I do think we're going to get above it. As I said, I don't know if we'll get there today or tomorrow or early next week, but I think we'll get above it. And I think that'll be probably the end of the rally for at least a couple of weeks. I think we'll probably start to pull back from above it. Probably always in long. Even though we had these 2 big bear bars here, we were above the moving average. We had a bear bar here, closed below, back above, closed below, back above. Bears unable to get consecutive closes below the moving average. You'll have limit order bears selling 81 high for a scalp. Bulls hoping that we continue up to yesterday's high and the December 12th high. And I think the bulls need to do more. You know, we're obviously always in long, but I think most bulls are taking partial profits or full profits. Probably we have consecutive bull bars 4 or 5. Probably buyers below 6. The bears want a wedge 1, 2, 3, 4, but probably buyers below 6. Limit order bears selling 81 high. Swing bulls stop below 2, the low of the day. It looks more like a bull leg in a trading range. Consecutive bull bars 4, 5, but neither one very big, and then weak follow through 6. Bears want a lower high major trend reversal, or a double top, or higher high major trend reversal. But right now the bulls are in control, and they're trying to get above that December high. This is the third leg up on 2, down on 3, up on 4, 5, pause on 6, up on 7. So it's a possible parabolic wedge rally, but it's also a 6-bar bull microchannel, and therefore bulls will buy the first reversal down. The bears will probably need at least a micro double top. Opposite of yesterday. Yesterday we had an 8-bar parabolic wedge, but it was also an 8-bar bear microchannel. So bears sold the first reversal up, even though ultimately it led to a reversal. And the opposite is true here. Bulls will probably buy the first reversal down. I mentioned that yesterday was a big range day. We opened in yesterday's range. Today could be an inside day. And that is still true despite this rally. So today could still remain an inside day. In other words, it might not get above yesterday's high. The bears will probably need a micro double top after a 7-bar bull microchannel, but this could be putting in an early high of the day. Even though the bears will probably need a micro double top, I think it's reasonable to get out of longs below a bear bar, especially if the bear bar closes on its low or near its low and has a 3 or 4 tick bear body. Because of what I said, we may fail to get above yesterday's high. Right now it looks like we will get above yesterday's high, but we have a possible parabolic wedge with 2, 5, and 7. It's still by the close, but when we were at this price yesterday, we sold up. So there probably will be sellers around here again today. Can the bears start to scale into shorts? I would not. First reversal down from a 7-bar bull microchannel probably will only last a bar or 2, and the bears will probably need a micro double top. Just like yesterday, the bulls needed a micro double bottom over here. So for the bulls, they don't have to get up below 8. I would, because of the important resistance at the December high. Limit order bears sold that 8 high, and they already made a scalp. Stop order bears, micro double top. I don't think the probability is good enough for a short, especially when we know there'll be buyers not far below 8. Can it break strongly above the December high and become a huge bull trend day? I don't think so. Anything is possible. Look at the follow through. Bull, bear, bull, bear. So when you get that kind of follow through, you typically get some kind of a trading range soon afterwards. We now have a 8-bar bull microchannel. So lower probability short. You got some bears selling right here at yesterday's high and that December high, but when there is a bull microchannel, it's usually better to not sell and simply wait to buy, and then after a micro double top, think about selling. I'm not doing anything above 9. We have bad follow through after the bull bars, and we're at resistance. Look to the left. December high and yesterday's high. You probably remember that last year I talked repeatedly about one price. I don't know if you remember what the price was. What I talked about was the close of 2017. The market oscillated around it all year. Here's the close of 2017. It was the most important price of the year. And we are right back there now. I suspect we're going to have to get there. We're so close to it. Can you sell below 11, higher high, major trend reversal? No, that's a 10 bar bull micro channel. The bears will probably need a micro double top. On the other hand, if we collapse like we did yesterday, then after you see 2 or 3 bear bars, then you could start to sell. But the odds are the first reversal down will not get very far. Remember I said 90% chance we would either go below the Globex low or above the Globex high. We just went above the Globex high. So that target has been hit. The December high has been hit. Yesterday's high has been hit. But we've not quite gone up to the 2017 close. And we're so close to it, we'll probably get there today, especially since the first reversal down, bulls will probably buy. 60-minute chart, bull trend, not great follow through, couple bull bars, bear bar, bull bar, doji, but no top yet. And then we have the big round number 2,700, just a little bit higher. That's the pop above the close of 2017. Just want to change the color. Should be some profit taking here. We're getting to the end of the first hour, and so far, very good bull bar. This is climactic, 12 bar bull micro channel. So we'll probably get some profit taking. The stop for the bulls is way down here. The bulls do not want to risk that much, and therefore they'll probably take some profits, especially since we're at a cluster of targets. Can this be the high of the day? It's possible, but most bears will want a micro double top or a series of bear bars before they conclude that this is the top. More likely, the first reversal down will be minor. That's the end of the first hour, bar 12, closing on the high, bull micro channel. So no short. However, I suspect we're not going to go much higher. We probably have to get above the 60-minute high, which is bar 12. Might get to the big round number 2,700, but I suspect we'll pull back before we get there. We have several resistance things going on right around where we are. Well, that's the highest tick reading of the day, so it's probably not the final high in price. We already know that simply because of a 12-bar bull micro channel. Unlikely it'll be the final high. Will the bulls buy the 13 low? Some will. Some will wait until we get closer to the moving average. This is extreme buying. So a lot of the bulls will wait for a couple legs sideways to down before buying. However, will the bears sell the 13 low, 14 low? I don't know if the math is worth it unless you're willing to use a wide stop and scale in. Buy the close 12, closing on its high, not buy the close 13 with that big tail. Some bulls will buy the 13 low. I would not. This is extreme. And when that's the case, I typically wait for a couple small legs sideways to down. Globex chart. For the bulls, 14 is a pullback in a strong bull trend, so it's a high one bull flag. But I think this is climactic, and I think the math is not all that good buying above 14. We're probably going to begin to pull back, get closer to the moving average. It's possible that this is the high of the day, or that we get a micro double top and it's the high of the day. But this is a micro channel is a very strong trend, and on a higher time frame, it's a breakout. 10-minute chart. This is what it looks like in the 10-minute chart. So unlikely to do that and then immediately reverse down without first going sideways for many bars. That's the high one, but I would let it go. I am letting it go. Might be more sellers than buyers above 14. Bulls selling out to take profits. So a lot of bulls did not exit below 13, knowing there would be buyers not far below. However, now that we've had a pullback, you'll get bulls thinking that maybe we'll get more of a pullback. Maybe we've had the pullback. Let's think about getting out. So there might be more bulls selling above 14 than bulls buying above 14. Will the bears sell above 13? I think the math is okay to do that. However, when a bull trend is this strong, I think it's better to be looking to buy pullbacks, like a two-legged pullback or a three-legged pullback. I am flat. I debated buying 14 for a scalp, and I ended up not taking the buy. And order bears selling 13 high, and a lot of the bulls were scalping. They expected a second leg up. However, this is so climactic, it looks like a lot of them decided to just scalp out, not confident that we're going to go a lot higher without pulling back. The market's deciding if it's going to get above the 2,700 big round number and then pull back, or begin to pull back first. Limit order bears 13 high, made money. If limit order bears start to make money in a bull trend, it's a sign the trend is weakening, and it increases the chances that we might start to transition into a trading range soon. Can you sell below 16? Micro double top 13. The pullbacks have been very tiny all the way up. And if you're selling, I think it's better to be selling with limit orders above prior highs and not stops below bars, like below 16. Bulls, I would get out below any bear bar, so 16, for example, and wait for a couple legs sideways to down to the breakout point, yesterday's high, and then look to buy lower. Is anyone going to buy above 16? No. We're probably beginning to pull back. We broke above all of the resistance, but not far above. So we'll probably come back and test every one of these things, including the moving average. Bulls, they can get out below bear bar, 16, or 4, 5, 6 ticks below any bar, 15, but I would have gotten out below 13. For the bears, micro double top, buy climax, bear bar closing on its low, but I think with as much strength as we have here, it's a minor reversal. And I think the math is not all that good for somebody scalping below 16. And for a swing trader, it's a minor reversal. And therefore, the reward is probably not big enough for a swing. So not a good sell below, other than to get out of longs. Confusion, up and down, up and down. Confusion usually means traders are confident we're not going to go very far down, and we're not going to go very far up over the next several bars, and therefore they look to buy as it goes down, scale in lower, and then scalp out, and they sell as it goes up, sell more higher, and scalp out. So the result is usually a trading range. This is a possible high of the day and a possible top of a developing range. But I think it's too early to be selling with stops below 16. If we get a pair of bear bars like yesterday, 67, 68, then traders will be more willing to sell closes and sell below bars. But even if we get consecutive bear bars, this is so strong that we're probably going to go sideways instead of down. This could be the high of the day, but if it is, we'll probably have to go sideways for 5 or 10 bars first and form some kind of a micro double top. So basically a buy climax on the open, and it can be very strong. The first reversal down typically does not get far. This can be the high of the day, but if it is, the market usually goes sideways for 5 or 10 bars and gets some other kind of a topping pattern before the bears can get a reversal down. Buy climax, possible high of the day, went sideways, we got a swing down from there. Buy climax, sideways for 5 or 6 bars. Buy climax, sideways for about 5 bars before the bears got a swing down. Sometimes you just get an endless pullback. If you get 3 or 4 consecutive bear bars closing below their midpoints, you're probably going at least a little lower. This turned out to be the high of the day. Buy climax, micro double top. 17 bar bull microchannel starting at yesterday's low over here. And you started to get a series of bear bars, 3 or 4 bear bars. Traders start to sell below, looking for a swing down. So even with a microchannel, you can get a big reversal, micro double top. Today we have a microchannel and a micro double top. So it's a credible candidate for the high of the day, but we probably will go sideways for several bars and then decide bull flag or high of the day. For the bulls, micro double bottom 14, but pretty good bear bar 16. Limit order bulls buying 14 low, even buying 16 low. But the closes of these bars now is important. Will the bears get 2 consecutive bear bars? Will they get 3 or 4 bear bars? If they do, that would increase the chances that we've begun to swing down. If they do not, that increases the chances that we'll go sideways for 5 or 10 or more bars. A couple bear bars and then a bull bar, sideways for about 5 or 10 bars. So unclear. Unclear means limit order traders buy below things, scale in and scalp, and they sell above things, use wide stops, scale in and scalp. So probably sellers above 17 and possibly buyers below 17. It's another high 1. You can call it a double bottom, 14, high 2, but pretty good bear bar plus bear body 17. Most bulls are not going to want to buy above 17. Some bears will sell 17 high, 1 point higher, 2 points higher, above 16. Other bears, instead of selling the 17 high, they'll wait and sell 1 or 2 points higher or above 16. And for the bulls, most bulls are not going to buy above 17. If 18 closes on its high, some bulls will buy. And then if we have consecutive bull bars, 18 and 19, you'll get more bulls willing to buy. Right now, probably beginning a tight trading range. I had a limit order to sell 1 point above 17. Instead of selling 17 and 1 point higher, I tried to sell 1 point above, thinking some bulls might buy above 17, and I did not get filled. Limit order bulls buying 17 low, made a 1 point scalp. It bounced 5 ticks. I canceled my order when I did not get filled. I thought there'd be sellers above 17 and we would test down. We've already done that, so I'm not going to leave the order there because it's already done what I thought it would do. I don't necessarily think it will do it twice. Micro double bottom, down 17, up 17, down 18, up 18, always in long. So it's theoretically a buy above 18, but I'm not taking the buy, and I'm also not taking the sell. The sell for me was above 17, betting the first reversal up would fail. This is now the second reversal up, less likely to fail, but not a strong enough buy for me, so I'm trapped out. Might get a wedge with 66 and 15. I have not bought puts or put spreads yet. I said I thought we would go above the resistance, and we have. But I want to see some sign that the rally is stalling, and right now there's no sign. This is the daily chart. Sellers at the high of the day, 16 high, at least scalpers. Buy the closed bulls, 15, disappointed 16. They bought more lower, and now it's back to that 15 close. And some of them are selling. They're trying to get out break even at their first buy, 15 close. and with a profit on their lower buy. So you have bulls selling here. I would not buy on a stop above 14, and I'm not going to buy on a stop above 19. We're probably in a limit order market right now. They sold above 16, excuse me, they sold above 17, they bought below 16, they bought below 17, and they sold above 6, and they sold above 16. So they're selling above everything, 13, 14, 16, 17, 18, and they're buying below everything, 13, 14, 15, 16, 17. So limit order traders. Possible high of the day. Buy climax to resistance. I said we may have to go sideways 5 or 10 bars. The bulls will try to get a bull flag and a continuation of the bull trend, and the bears will try to get a reversal down. Which is more likely? We're at really important resistance. So I think we're probably not going much higher. I don't know that we're going to get a bear trend out of it, but I think we're probably not going much higher. You know, we could simply stay sideways. I said probably not a swing short below 13 or 16. However, if we get a bear bar here at 20, closing at its low, it would be a more credible swing short. Is it worth taking? I think probably not. I think it's unlikely that we'll go straight down. More likely we'll go sideways more bars. But this is the first credible swing sell setup for the day if the bar closes near its low. Let's say today ends up as a huge bear trend day. Well, then you do not have to worry about selling below 20. You can sell after we see 2 or 3 or 4 bear bars and some sign that the bears are in control. That's a higher probability sell. $60-minute. Bad follow through again so far. Big bull bar, doji. Bull bar, doji. The close of the bar is important. If it has a 3-tick tail, 4-tick tail, most bears will not sell with a stop below. If it closes on its low, you will get some bears selling below and putting a stop above, taking a chance as the high of the day, knowing that even if it does remain the high of the day, we still might go sideways another 5 bars before we get a reversal down. Decent close, right? So swing sell, but more likely sideways. Always in bulls, I think they get out below 16, and they did not buy above 17 or 18. They want to buy above a bull bar closing near its high with at least a 2 or 3 or 4-tick bull body. They're hoping 21 will be a decent buy signal bar. So for the bulls, a small bull flag, breakout, pullback, and then they're hoping for resumption of the bull trend. It would be a credible buy if 21 closes near its high. I have this line drawn in here because it's still always in long, so it's still more likely we're going higher. But if we do go higher, we may reverse down, maybe around the 2,700 big round number. We broke above all of this resistance, but not far above. And because it did not break far above, it increases the chances of a reversal. So spike and first leg up, pull back, second leg up, pull back, and maybe third leg up. This would be a stronger buy if it was at the moving average instead of above the moving average. Is the price action much better than average over the past 8 bars? It's not, and therefore traders don't want to pay that much above the average price. So it lowers the probability for the buyers above 21. It's still always in long, so it's a reasonable buy, but I think not as good as it would be if it was taking place at the average price. For the bears, it's still a short below 20, but probably a minor reversal. Breakout mode. It's certainly an okay swing buy above and swing sell below 20, but the odds of it being a swing are small. So more likely, if it goes up, it will not go up all that far. Bulls will be disappointed and they'll scalp out. If it goes down, it probably will not go down all that far. Bears will be disappointed and they will scalp out. So more likely, more sideways. My problem with the top is it's not a typical major top. It's not a higher high major trend reversal. Too many bull bars. So to me, you start the process over again if you're looking for a higher high. It's not a wedge. We do not have a third push up. It's a small double top, but probably not big enough to result in a bear trend. So it's a minor reversal setup. Minor reversal, maybe 25% chance of a bear trend. Still always in long, getting near the end of the second hour. And so far, weak follow through after a strong first hour. So a strong first hour, tight trading range. The bears are hoping for a top. Very often, if you have a tight trading range, you'll get a double top, lower high. So you have a lower high and then a double top, lower high. And that is a higher probability swing sell. Here we simply got a double top. We call it a triangle top. Still on the buy above 21. On a smaller time frame chart, it's a triangle. And we have three tops and a lower high. It does not matter that this one is a little bit above that. It's still a triangle, a breakout mode pattern that is contracting. A triangle and a bull trend, bull flag, more likely than a top. But also, if you get a triangle late in a bull trend and you get the bull breakout, the triangle usually ends up being the final bull flag. And if you rally up for 3 bars, 5 bars, 6 bars, 10 bars, usually you come back to the triangle at some point. It's a magnet. The market thinks this is a fair price. If you break above it, it's above a fair price. And bulls take profits, bears sell, and you usually come back to the triangle. And the opposite is true if you sell off. The triangle is a tight trading range, a magnet. Bulls want as big a bull bar as they can get on the 60-minute chart for the second hour. At a minimum, they want a bull body. At a minimum, they want bar 24. This is bar 23. At a minimum, they want bar 24 to close above the open of bar 13, the start of the hour. What about selling right here, above 22, above 23, and putting a stop 2 ticks above 19? Betting that we'll get the double top. Very little risk and very big reward, right? You're looking for a reversal down. But whenever you have fantastic risk reward, you have low probability. And that means that we're probably going at least a little bit higher. In other words, if you take the sell, you're probably going to get stopped out. Because if you're only risking 2 or 3 ticks to above 19, very small risk, very big reward, great risk reward, there has to be an institution willing to take the other side. And it's like the state of California. You can win $1 million with a $1 ticket, great risk reward, and they're happy to sell you the ticket because they know you'll probably lose. So if you have great risk reward, the other side has great probability, you have low probability, which means you're probably going to get stopped out. What happens if we reverse down on 24 with a pretty good bear bar and a double top with 19? That would be a credible sell, but we do not have that. Limit order bears sold above 13 made money, sold above 14 made money, and they're probably selling above 19 as well, looking for at least a scalp. By going above the bar 19 high, we've broken above the 18 bar range. Right now, only 10% chance we'll get all the way down to the low of the day. And therefore, either the day remains a bull trend day or we enter a trading range. Can we go up for a measured move? I doubt it. We might, but I doubt it. We're in a tight trading range, and the market resists breaking out. Always in long, but not strongly bullish at this point. Not a very good sell signal of R24. There's something of an invisible magnet here. February low, important price. December low, important price. And therefore, a measured move up is an important price. So there's, I think, invisible resistance there. Remember, I think we're going to get a 50% correction, and I think we're going to get to the February low. If we were to reverse here, 50% correction is below the February low. However, if we were to reverse exactly to the February low, the high would have to be up here, around 2750. Right now, I do not think we'll go up that far before we pull back, but no top yet. We're still hoping high of the day. Now a small wedge, 15, 19. Bears trying to get an IOI. We have enough bars now for a credible top, but our tight trading range, it's probably less than a 40% chance of a swing down if 26 closes on its low. Probably buyers below at the resistance levels, now support, and buyers below, moving average buyers below the 18 bottom of the range. Not a lot of buying going on up here, but probably buyers below. I do think we're going to get a wedge top, but will we get a big trend reversal? I think more likely we'll get a continuation of the trading range that we've had for the past hour, and the range will just get bigger, a little higher, a little lower. Not strong by the close. Bull bar 19, bear bar 20. Bull bear, bull doji. All right, we're not getting consecutive strong bull bars. Breaking out of a triangle, so possible measured move up. I bought above 21. That was my last trade, and I scalped. Disappointing follow through 22. The always in bulls who could outblow 16 had to buy again, theoretically, above a bull bar 21 or 23, but probably not going much higher. I said I thought we might get a midday wedge reversal like this, gap off strongly up, and then a weaker rally, and then a reversal later in the day. Did not go all the way to a new low, possible final flag. So I think that's similar to today. I think this is a possible final flag, and that this rally is comparable to this rally. Here we went up more than an hour before we get a reversal. bears like to see bars closing on or near their lows, and they had one here, here. This one closed on its low, and then two more here, and they'll start to sell, looking for a couple legs down. Can you sell below 27 if it closes on its low? We're in a small pullback bull trend from 18. While it's possible it's the high of the day, small pullback bull trend, probably a minor reversal, a 1 or a 2 bar pullback. The bears would like to see 2 or more bars closing on or near their lows. Here, did not fall below the bear bar, did not fall below the bear bar. Here, it took several bars to fall below, but that lack of urgency meant not many bears willing to sell below, but a second or a third sell, it looks like they were willing to take. It's a transition. It's starting to become more bearish. It took several times before the bulls finally gave up right here, and the bears finally started to sell. So low probability short below 27, probably still going higher. It's similar to that rally that we had yesterday in here, around the same time of the day. Lots of bull bars, but they're all small. 30 years ago, I'd look at something like this and say, how can it keep going up? It looks weak. Look at all the bear bars and dojis. How can it keep going up? And now I look at it and say, oh, it's going up. And it'll keep going up until it doesn't. So I don't worry about how it can keep going up if it doesn't look all that strong. As long as it's going up, I'm only interested in buying. Yesterday, if we get a bear bar like 35 yesterday, closing on its low, I think the bulls get out and then they just wait. And aggressive bears would sell. Most bears would wait for 2, 3, or 4 bear bars before selling. No nearby resistance on the weekly chart. The resistance was the moving average. We're trying to break above it. Next resistance is up here at 2,800, the November highs. And daily chart, we're at resistance. We're trying to break through it, but it's not clear that we're going to be successful. And if we do, next resistance, November, December highs around 2,800, and then that invisible resistance right here, the measured move from the low to the February low of last year. Like yesterday, even though it's not going up very fast, it's still going up. And the pullbacks are not small, not big enough to sell. I think we'll probably stall out a little bit higher around that measured move target, but nothing to sell yet. Bulls are still buying the market. It's similar to yesterday's rally. I said bulls will just keep buying. If it goes up, they take a profit. If it goes down, they either get up below the bear bar or they buy more lower, expecting it to come back up to the high. Bears typically need some kind of a double top or a micro double top for the high of the day, even if you have a wedge rally. Yesterday, we got back up there, but FOMC, most traders are not going to be holding positions going into the FOMC. So the bulls who bought the 34 close, disappointed 35, get out below 35. They did not hold and buy more down here. Can you sell with a limit order at the target? If you use a wide stop and scale in, it's probably okay to do, but when a bull trend looks like this, I think it's not worth shorting. I'd wait for it to stop going up and start to get some bear bars. by vacuum, a bigger bull bar. The bull bodies are getting smaller, they're getting bigger, 26, 27, 28, 29. So they're accelerating up, but it could be simply a by vacuum test of that measured move target. Probably some profit takers up here. I have this wedge drawn in, but I'm going to get rid of it. Market's ignoring it. Traders will just keep buying. Tail on top. I usually do not buy above the close of the bar. It's still by the close, but I prefer buying above bars that close on their highs. Also, we have a bigger bar, 29, so climax, and we're at a measured move target. Bulls, I would get out maybe 4 ticks below any bar, including a bull bar, 30. I would get out 1 tick below a bear bar with 6 consecutive bull bars. It's similar to 13, probably buyers not far below. You can call it a wedge, 66, 15, but most bears will want at least a micro double top. So not a good sell. Suppose 31 is a bull inside bar, then it's comparable to 14, a high 1, but like 14, it's a high 1 after a buy climax, and there might be more sellers than buyers above 30 and 31. Unlikely to reverse down sharply despite the wedge without first going sideways for a few bars. And even if we go sideways for a few bars, I doubt we're going to get a sharp reversal down when the rally is in such a tight bull channel. Do I think we're going to come back here? Yes, but not in the next few bars. We have to first stop going up, go sideways a little bit, and then the bears will try to get the reversal. Up strongly, we stopped going up, sideways a little bit, bears unable to get the reversal. But the same process again, bull trend sideways, and then the bears will try to get a top. But not much downside risk over the next few bars. I said that yesterday, bar 30, bar 66, and then the bears got a couple of big bars. If they do that again, then I think traders will be willing to sell closes and sell below bars. By climax, we should come back down here, a triangle at important magnets, so we should get down here by the end of the day, but probably we'll have to go sideways first. Can the trend keep going up all day? Yeah. Sometimes you get these bull trends from the open that just keep going and going and going. It's unlikely, but they definitely happen. Gap up, and it just goes up, tries to reverse, just keeps going up and up and up and up and up all day. Small pullback bull trend. That kind of a trend, is, once every month or two, one that's that strong. But you get them. It just goes up relentlessly. Low probability short, but I would get out of longs below a bear bar 31. Even if we go a little bit higher over the next few bars, we're far above the average price like this. We'll probably start to go sideways and down, get closer to the average price. Important bar 32. Will it be a doji like 17? If it is, then we'll probably go more sideways 2 up. Or will it be another big bear bar like 68? If it is, we'll probably go lower before the bulls try to buy again. So far, 31, small bar. Probably buyers around where we are, 31 low. High 1, bull flag 32. I would not buy it. I would wait for a second buy signal. High 2, probably sellers above 32, sellers above 31, sellers above 30, limit order bears. Bulls, better to wait for a couple legs sideways to down like this. Here, a couple legs sideways, 1, pull back 2, pull back 3, triangle. Can you sell and use a 10-point stop and scale in higher? The math is okay for that, but this is the risk. Do you sell below this bear bar, use a 10-point stop and scale in higher? You sell more here, and it just keeps going up and up and up, and you end up with a huge loss. So even though the risk is small, those days do not happen often. I don't like big losses, so I would not do that. Limit order bears, they will sell 32 high, 31 high, 30 high, and maybe risk a few points above 30, maybe sell more as it goes up, betting that we've probably begun a trading range. Limit order bulls trying to prevent a second consecutive bear bar like 68 yesterday. So they are buying, even knowing that it's probably only a scalp. I would wait for a couple legs sideways to down before buying. Well, the bulls who did buy are okay, but probably sellers above. Limit order market, buyers below, sellers above. The bears who sold above have made their money. The bulls who bought below made their money. So, start of the limit order market. By the close bulls, 30. It looks like a lot of them sold when it got back to their buy price. The 30 closed. They were disappointed 31. It looks like when the market got there, a lot of the bulls sold. You can see that tail on the top of 32, and some of that is from the bulls who bought the close of 30, who bought the high of 29, disappointed 31, concerned that we have a bunch of magnets here, and they've just sold out of their longs. Micronoble top, good for the bears, but not yet a good sell signal. A little bit of a climactic move, 32 outside up, and look, we might be going below the outside up bar. Let's say we get an IOI 33 inside bar after an outside bar. It's still a credible buy, but I would not take it. To me, bulls get off below 31, and they want to buy closer to the average price. We got within a point of the moving average here, a point or two. We're probably going to get closer to it here as well. High 2, 31, but a bear bar, tight trading range. Stop order bears, not eager to sell, but limit order bears, they'll probably sell somewhere above 32, the double top. They might sell above 33, a bear bar, expecting it to get closer to the average price. Bulls still always in long, but I would not buy above a bear bar this far above the average. Swing bears, can they sell below 31 or below the double top 32? They can, but in general, until you get a strong reversal down or a clear top, it's better to be selling with limit orders, which most traders should not do. So most traders have to wait for a better looking stop entry top or for a bear reversal like yesterday, a pair of decent bear bars. And the wedge drawn with 66, but it might also simply be a parabolic wedge with 81. Too early to tell. We have to start to see more bear bars. Possible parabolic wedge by climax. And a lot of times you get a pullback. It's a bull flag, but you just keep adding bear bars to it. And at some point you conclude it's not a bull flag, it's a bear trend. Here's an example. Bull flag, high 2 for a bear bar. At some point you conclude the bears have taken control. Endless pullback. Rally, maybe a bull flag, but it's pulling back endlessly. And if you get a couple big bear bars, then you got to be thinking it's probably a bear trend. Big gap up, sideways, a decent sized bear bar closing below a lot of bars, and it became a bear trend. Very strong rally, bull flag, but it just kept going down. And once you start to get big bear bars closing on their lows, you got to be thinking maybe it's a bear trend. Bears need big bear bars closing on their lows to make traders believe we've begun the sell-off back to the final bull flag. And for the bulls, a high 235, but still reasonably far above the moving average and not a bull body. So I'm going to not take the buy. What do? Well, we're always in long. I'd get out of longs below 31. Limit order bears probably will sell the high of the day. They may sell the 35 high after 3 bear dojis. Stop order bears need to see big bear bars closing on their lows, which we do not yet have. I did buy some puts a little while ago up in here. I'll probably buy more higher. I'm not looking for a bear trend. I'm looking for a trade down. Breakout, but I think fairly climactic and at a resistance area, so I think we'll probably pull back. This is the E-mini. And this is the spider. How much will we pull back? Probably at least a couple of points, maybe more. Potential final flag. I said that I thought we'd come back into this trading range at some point, and this looks like this could be the start of the move down. Will bulls buy the close by the moving average? I would not. We now have 4 consecutive bear bars. So first reversal up, probably minor. For the bulls, a 20 gap bar buy, a gap between the moving average and the low of the bar. And that's been true for over 30 bars. Bulls have been buying above the average price. Now they're finally getting to buy at the average price. So there will always be some bulls doing that, buying with limit orders at the average price or looking for a reversal up from the moving average. But it looks like we've begun a sideways to down move, probably back to all of this resistance. It was resistance. We broke above it. The bulls hope it's support. This is a likely final bull flag. On these puts, if it drops down here today, I probably will take profits. So if I'm looking for a trade down. I'm buying in a very strong bull trend, so unlikely to go down very far. So if it goes down some, I'll take profits. If it goes up, I'll look to buy more. 2, 3, 4 points above where we are. 10 or 20, 30 points above where we are on the E-mini. On the spider, 2, 3, 4 points above. 6-bar bear micro channel, not a good buy above 37. If we get 3 or 4 consecutive bull bars, then I'll buy higher. But this looks like it's probably the start of a move down to that final flag. It's a credible high of the day. I don't know if it'll end up being the high. We may get one more new high, so maybe 1 pullback, 2 pullback, 3, and then the high of the day. But right now, this looks like a credible high. Parabolic wedge, and now endless pullback. If we go sideways here at the moving average and get a micro double bottom and a second buy signal, that would be a stop entry buy. If we get 3 consecutive bull bars, it could become a buy the close or stop entry buy. But more likely, there'll be sellers above and we're going to go sideways. Very strong rally here. You got to be thinking in terms of measured moves. We have a gap 66 high and this low. We're beyond a measured move up based on that trading range. Might get a measured move up based on that, but not likely. And then you got to be thinking leg 1, leg 2. So that's leg 1 up to here, and then leg 2 started here, and we're just about at a leg 1, leg 2 measured move. High 2, 31, but 5 consecutive or 4 consecutive bear bars, probably sellers not far above. So 20 gap bar buy and a high 2, but I would wait for a second buy signal. In this pullback, you sometimes get bull bars near the moving average, for example, here. Yet the bulls keep losing and the market just keeps pulling back. And at some point, bull flag, bull flag, bull flag, at some point, the bulls give up. You get that, and then it clearly becomes a bear trend. This happens about 40% of the time, 60% of the time. It enters a trading range or resumes up. Endless pullback, bull trend resumed. Endless pullback, bear breakout, yet we got a trading range instead of a bear trend. Endless pullback, bull trend resumed. This bar and the next bar are important. If it's an endless pullback, it should be a small pullback bear trend. Small pullback means just that. The bounces should be small and last only a bar or 2. So if this goes up 3 or 4 bars, then it's probably not an endless pullback. Endless pullback, up 1 bar, up 1 or 2 bars. Up 1 bar, up 1 bar, up 1 bar, up a couple bars. But if you start going up 3 or 4 bars, the bull trend is probably resuming. It's still always in long, but with the 4 bear bars, 5 bar bear micro channel, I think better to wait for a micro double bottom, or as I said, 3 or 4 consecutive bull bars. Probably sellers not around where we are. Okay, so that's 2 bull bars. Can the bulls get a 3rd bull bar? If so, then the pullback has probably ended. Can you sell below 39? Taking a chance. This is the high of the day. If you're selling, it's probably better to be selling with limit orders, 37 high or 1 point higher. It's still always in long, and we're still right above the moving average. And for the bulls, this bar is important. If it closes on its high, then we're probably going higher. It's probably not going to close on its high. Most likely sideways. Like this. Like this. Bulls giving up. Right? Can the bar close on its low? Can it close below the moving average? Right? I sold this. I'm holding puts, and I sold the E-mini during that collapse. initially I scalp until I'm confident that the bears are in control. Remember I said this is a likely candidate for a final flag, a tight trading range late in a bull trend, and the market often comes down there and goes sideways. We're pretty close to the target. Can you buy above 30, above 40? Bear trap. If it's a big bull bar closing on its high, then it would be a good candidate for a bear trap. Let me take a look at ticks. Ticks, the low reading of the day, minus 700, the blue line. The red line is minus 1,000. Typically, a new low of the day and a fairly oversold reading, it's usually not the final low in price. So we're probably going a little bit lower. For the bulls, they're thinking, we got a bear breakout, but look, we got a bull bar closing on its high. This is the 1 minute chart. Maybe it'll be a failed breakout. But let's see what the 5 minute bulls can do. Can they get 40 to close on its high at or above the moving average? If they do, then it would increase the chances that this is a trap, a bear trap, trapping bears into hoping they're getting a bear trend, and instead it's simply a pullback testing support, and the bull trend then resumes. For the bears, they want, at a minimum, no bull body. So a doji bar, if it looks like 17, no bull body, that would be bearish, increase the chances of going down. They would like to get consecutive bear bars, like yesterday, 67, 68. That would greatly increase the chances that we're going down. What's probably going to happen? Confusion, a small bull body. However, I think we're probably always in short. Just the size of the bar and the context are enough to make it more bearish than bullish. But I'll change my mind if 40 closes on its high, especially if it closes above the moving average. For the bulls, let's say 40 does close on its high at the moving average. It's not high enough probability for a scalp. The bulls taking that buy are doing it for a swing, betting on a new high. I'm not going to buy above 40, no matter what it looks like. I would wait to see if we get 2 or 3 bull bars. Right now, I think we have a potential measuring gap, 37 low. There's the high, there's the gap, the 37 low, and the 40 high. And the measure move takes us back down to the support areas, the close of last year, or the close of 2017, and the tight trading range, yesterday's high, the December crash high. What happens if it has a bull body but a 3-tick tail on top? I think that would be better for the bears than for the bulls. It would increase the chances that we're going lower, which I think we're going to do. I think we'll get more into the final flag and down to the obvious support levels. Okay, that's exactly what I'm talking about. A bull body, not good for the bears, but tail on top, most bulls are not going to buy above 41. They'll wait for 2 or 3 consecutive bull bars and then buy. So it's slightly more bearish than bullish, but not strongly bearish. So trading range, we've been in a trading range since bar 13. We have a rally. It was a bull trend, but now that we see this is probably part of a big trading range that began over here. And we're not quite to the bottom of the range yet. Bears want a bear II for a low one bear flag, and the bulls already have a buy signal bar 40. And they're hoping that we reverse up. Their first target, always the top of the most recent sell climax, the 39 high. Bulls, they could buy about 41. I would not. I think we're probably going a little bit lower. For the bears, not a great looking sell. but certainly an okay swing sell. Ticks. There are about 3,000 stocks on the New York Stock Exchange. If IBM trades up compared to its last trade, it gets a tick value of 1. If GE trades down compared to its last trade, it gets a tick value of -1. If another stock, ExxonMobil, trades at the same price as it did on the last trade, it gets a value of 0. And if you take all 3,000 stocks and add up all the zeros, ones, and -1s, you get the tick number. And if you have a very negative tick number, like -700, that means a whole bunch of stocks went down. And so it's a broad sell-off, and usually the first low is not the final low. Right now we're testing that low. Sometimes it just tests the low and then reverses up. That's what the bulls were hoping. And the bears are expecting a new low in price after a tick extreme. The red line, -1,000, is more important than the blue line, 700. And the opposite is true with rallies. Yesterday, at the end of the day, we had a tick reading of 1,000 over here. And we got one more high in price, and fewer stocks participated. We had a lower high in ticks and a higher high in the stock market price, a divergence. And with fewer stocks going up, there was more of a chance of a reversal. But the highest tick reading of the day, usually it's not the final high in price. The bulls still are on the buy, the I buy above 41. The bears are on the I sell below 41. Breakout mode. The market's deciding, is 39 a start of a bear trend, or is it a bear trap? I think it's more likely the start of a swing down. I say a swing down. I'm not expecting a bear trend. As I said earlier, I think the day is probably going to end up mostly sideways. We had a very strong rally here, and then big up, big down, and so far sideways for 2 hours. Hard to see, but it's basically an OO pattern here. Last bar was outside. This bar is kind of outside. I consider it an outside bar. So to me, that's a buy signal. Even though 43 did not go above 42, it went up to the 42 high. So I still think of that as an outside pattern. It's not as strong compared to one that truly went outside, but it's still an outside pattern. As I was talking, I tried to place a buy stop above 43, and I was too slow. That's one of the problems when I talk. I sometimes miss trades. Sometimes when I don't talk, I'm taking trades. Consecutive outside bars. If the market sells off and you get consecutive outside bars, especially if the second bar closes on its high, it's a buy. Looking for at least a trade up, sometimes a swing up. Another example. Here, consecutive outside bars down. We have an outside bar here, and then a second outside bar. Even though this high is at that high and not above, it's similar to what we have today. I still consider it an consecutive outside bar. And closing on its low, traders will sell below, looking for a trade down. Consecutive outside bars and a sell-off, bull bar closing on its high. consecutive outside bars in the sell-off. Not particularly good bull bar, but it's consecutive outside bars. Here, here, bulls will buy above that bar. Because we did not get the follow through 40 on bar 40, not clearly always in short, and now it's back to always in long. First target, top of the sell climax, 39 high. Can this still be a low two bear flag and lead to a swing down? In part, it depends on how 44 closes. If the body overlaps 37, then we no longer have a body gap. On the other hand, if the bodies do not overlap, then we still have a potential gap. These lows overlap, these highs overlap this low, but the bodies do not overlap. And therefore, there's a gap between the bodies, and it's a type of measuring gap. But if the body gap closes, here we have a tail that overlaps the breakout point. So the pullback overlaps the breakout point, but the bodies do not overlap, probably going lower. Here we have a body gap, but now this body overlaps these bodies, usually represents the end of the bear trend, sometimes the start of a bull trend. So the close of 44 is important. Will it close the gap? If so, then the sell-off has probably ended. Will the close of 44 be above the open of 37? If not, then we still have a body gap and we still could get a swing down. If it does overlap, it significantly reduces the chances of a continued sell-off. Still have a gap between the lowest body from the breakout point. We broke below this point and we're pulling back, testing a breakout test. So the pullback, the highest body in the pullback right now is the 45 open, still not overlapping the breakout point. But 4 bull bars makes this a low probability, low to short. Confusion usually results in the trading range, which is what we've been in for a couple hours. Can we go to a new high of the day? I doubt we'll go. If we do, I doubt we'll go much further up. Too much trading range trading, unlikely to become a trend. Important bar. If it's a bear bar closing there, it's low. It's a better sell signal bar. With the 4 bull bars, it's probably not worth a scalp. If it closes above the 37 open, the bodies will be overlapping and we'll have 3 bull bodies. That would be a credible buy for at least a test up here. You can see bulls bought the 44 low. Not a good looking sell signal. 4 bull bars and 5 bars. So more bulls bought it than bears. If the bears can get 45 to close on its low, that would be a higher probability sell signal bar. We're still not all the way down to the apex of the triangle. Plus, we still have that fairly extreme tick reading down here. Not closing on the low 45, so not a very good sell. To me, it still looks slightly more bullish than bearish. We have a bull II gap bar, first bar all day with a high above the moving average. First time the bears do anything in a bull trend, bulls typically buy it. So the first time the market trades below the prior bar, 13, they buy it. The first time there's a bear close, they buy it. The first time it touches the moving average, they buy it. First time there's a close below the moving average, they buy it. The first time there's a gap, a bar completely below the moving average, a gap between the high of the bar and the moving average, they buy it. Bears trying to keep the body gap open, and now they're trying to get a micro double top, a low 3, a wedge, but they want to get a bear bar closing on its low. Outside down, but the bears really want 46 to close on its low, and then they'll get some stop order bears. Excuse me. Good bear bar. I don't know about selling it for a scalp, but it's certainly a credible swing sell. We're in a tight trading range here, so there might be more buyers than sellers below things. Bears, I would get out above the bull bar 47. It would be the second reversal up, and I think it's an okay swing buy if 47 closes on its high. The bears have tried to get below 41 or 39 several times here and here. So far unable. At some point they give up. We're getting too many bull bars here, so I think the bears will buy back their shorts above 47 if it closes near its high. They'll probably buy back their shorts above 46, a big outside down bar. Close just below the moving average. Why could the bulls not do better? A lot of bulls will wait. Still in breakout mode. Reasonable buy above 41, again above 47. Reasonable sell below 46. Probably going lower. 37, 39 was an exceptionally big bear bar, and that typically has at least a small second leg down. Sometimes the second leg is only sideways, like 46. I am currently flat. I wanted a good sell signal bar, 41, 44, 45, did not get it. Well, that's theoretically the sell below 46. Are we always in short? We probably are, but as I said, I don't think. I think the odds are against a big bear trend, big reversal. I think this is more a trading range. This is the bottom of the buy climax, so that would be a target somewhere down here. We're testing the final flag, which I said we probably would do. For the bears, head and shoulders top, left shoulder head, right shoulder. For me, it's not. It's a lower high major trend reversal, but I don't know. I think not enough bars plus a lot of buying here. So I think it's more likely big up, big down, big confusion, and trading range. You can see traders have sold below 46, scalped. I did sell below 46, and I did scalp. Bears were likely to get a second leg down after the surprise bar 39. They have it. They don't have. They might get a third, a fourth, or fifth leg down, but their minimum goal was one more leg down, and this is it. So bears will buy back their shorts somewhere below 39, and bulls might buy. You can call it a wedge, high 3, 45, 47, but to buy above 49, I think the bulls will want a strong bull bar. Otherwise, they'll wait. Crude oil. I've talked about this as a final bear flag, and we're back up to it. Now we have a wedge, 1, 2, 3, around the top of the bear flag. So if today closes near its low, we'll probably trade down for at least a day or two. Will the bears start to get a series of bear bars? And will this become a bear trend? I don't know. We had a lot of buying here, and that reduces the chances of a big bear trend. We got that measured move target down here, that pink line. The gap, the body gap stayed open. The bulls kept trying to get a body to overlap that body and unable. So we still have an open body gap and therefore a potential measured move down to here. Is it sell the close yet? It is, but it's really not all that good. We're right above support. We're at the apex of the final flag, the close of 2017, the December 12th high, yesterday's high, bottom of a trading range, bottom of a buy climax. So I'm back to flat, and I'm not selling below 49. To buy, I want a very good looking bull bar. Otherwise, I'll wait for it to go sideways for a few bars and then look to take a second buy signal. So if we reverse above 50 and 50 does not look like a very good bull bar, I will wait. Bears, I would get out above 50 if it closes like this near its high. And bulls, I'm not sure that it's, I don't think it's good enough for a scalp. We still have room to targets below, so I still think we're going lower. So not a very high probability buy above 50. But bears, I would get out of shorts above 50 if it closes. I would get out of shorts above 50 if it's a bull bar, which it probably will be. Trading range, we're at the bottom of the range. We've been selling off for 2 hours. So you have to be thinking probable bull leg pretty soon. I think it's probably not worth taking. We're in a tight range here, in a tighter range here. So the market's probably not going to go very far, which means buyers here are probably scalping. And I don't know that the probability is high enough for a scalp after those two bear bars, 48, 49, and with obvious magnets just a little bit below. And then we're in that time of the day between 10 o'clock and 11:30 when nothing is as likely as it appears to be. Bulls trying to get a second buy signal bar, but middle of a tight trading range, right below the moving average, and with magnets still below. So not very good stock entry trading. Bulls trying. They're hoping this is a bull flag. 39 strong enough for a second leg down. The bears got their second leg down. Now the bulls are hoping that we've begun a swing up. Not clear yet. I suspect that we have. We're getting far too many bull bars, and that reduces the chances of this going down much further. Everybody wants a trend. They don't care if it's up or down, but that's not what we have, and we may not have a trend for the remainder of the day. A lot of times when you have a trend and then the market goes sideways, you get trend resumption or trend reversal at the end of the day. I suspect that we're going to stay in a triangle or a tight trading range. Bulls want trend resumption up. Bull trend trading range, trend resumption up. Over 3 days, bull trend trading range, trend resumption up. Trading range, trend resumption up. And the bears want trend reversal down. Bull trend trading range, reversal down. Up is more likely than down. However, we've had trading range bars since bar 13, and bulls and bears are failing to get consecutive big trend bars up or down. I think we're going to close the gap, the body gap, 37 open, but I don't know that we'll go much higher than the 39 high. Right now the bulls have to get about 46. That's a sell climax. Not good stop entry trading here. A strong buy the close rally. 53, 54 closed on their high. Traders will buy those closes, or about 55. Conspicuous tail. Fewer traders will buy that close. We still will probably get to the 39 high. We close the body gap. So the body of 55 overlaps the body of 39, 37. And to me, that represents the end of the bear trend, but we already knew the bear trend ended when we started to reverse up above 50. If a bear trend ends, the market is then in either a trading range or a bull trend. It's been in a trading range for several hours. This does not look like a bull trend. It looks like a bull leg in a trading range, and traders are hesitant to buy above bars unless the bars look perfect. They'd rather buy pullbacks. Limit order bears will sell the 46 high. They'll be less willing to sell the 55 or 56 low because this rally is in a tight channel. So the bears a double top, 46, a low to 51, but 3 bull bars, tight bull channel, and the 39 magnet above. So I think it's not worth taking that short. So the bears double top, bear flag 46, but 5 of the past 6 bars here were bull bars, and the sell signal bar 56 was only bear doji. So minor reversal. Limit order bears selling above bars made money. Bulls hoping for a double bottom pullback, and then second leg up. Probably not going to go far up or down for the rest of the day. And if we do get a move, it probably will be starting around 12:30 or so. Double top bear flags like this never look like you're going to swing down, but 40% of the time you do get a break below the neckline and the bottom edge should move down. So they are reasonable swings, but they're just not high probability. Double top bear flag. Usually the second rally is strong enough to make the market always in long, but it doesn't matter. If you get a bear sell signal bar, 40% chance you're going to break below the neckline of the double top and fall for a bottom measure move down. Strong rally, probably always in long, but look to the left, might be a double top. Small double top bear flag. Sometimes they're bigger. Here we have a double top bear flag. We got the measure move down. Here, double top bear flag. It failed. The breakout failed. Bulls trying to get a reversal up after a sell climax. Yet, double top bear flag. Sold off for a swing down. So 40% chance we break below 49 and fall for a swing down. 60% chance we do not. Small triangle, higher, low, lower, high. Apex of a tight trading range. The bears double top, lower, high, major trend reversal. Double top bear flag. But not, most major trend reversals do not lead to major reversals. This one probably will not either. The rally was just so strong twice today. That makes a trading range more likely than a bear trend. Bulls trying to get a credible buy. The market often tries to resume or reverse around 11:30, 11:35. So this is the time window when it frequently happens. For the bulls, it's a double bottom 50. You can, if you want, you can call it a head and shoulders bottom. Left shoulder ahead, right shoulder. If you want, you can call it a bull flag, head and shoulders bottom bull flag. Bulls will buy if 62 closes near its high. They're looking for a swing up. They might buy for a scalp as well, but it's probably a decent swing trade, looking for trend resumption at the end of the day. And for the bears, they're still on their short below 56, but I would get out above a bull bar of 62. If 62 has a 3-tick tail, a lot of the bulls will wait to see if 63 or 64 close on their high. Not a great close for the bulls. So it's a swing buy, or traders will wait to see what 63 looks like. Bears trying to prevent the market from going above a bull bar. Did not get above 59 so far, not above 62. I think the bears who sold below 56 should get up above 62. Aggressive bulls can buy for a swing up, higher probability. Wait to see if we get 2 or 3 bull bars closing on their highs. Like this. You can buy above 21, or you can wait for 25, 26, 27, and then start to buy. Bulls trying, can they start to do this? Get bull bars closing on their highs. If they can, they might be able to get back to the high of the day. I think they'll have a hard time getting above the 39 high and the 55 high. Bears, I would get out here. Swing bulls can buy, higher probability, wait for a bar closing on or near its high. But bears, I would get out. The moving average, good, but they're still not getting closes on the highs. So still not all that good. Not a lot of traders willing to buy at the tops of the bars or into the close of the bars. Bears double top 59, but 3 bull bars, I would not sell below 64. Right at the 2700 big run number. Magnets below. Will the market pull back and close below that key resistance on the daily chart? Or will it close up near the high of the day? Or will it continue to do what it's been doing and close in the middle of this range around 2700? I doubt we're going to close at the high of the day. I doubt that we're going to close far below the now support. So the day will probably remain a trading range day. Might close a little bit higher, maybe a little bit lower. With this much buying, and then again here, even with the head and shoulders top and lower high major trend reversal, the odds are against a big reversal down. Too much buying pressure and not enough selling pressure to offset it. Bulls trying to get this into a buy the close rally. Decent bull bar, always in long. Bull body's getting bigger, 63, 64, 65. The bears want a lower high, but with 4 bull bars, they're probably not going to sell below 66. Because of the trading range, a lot of bulls are scalping. But it's a reasonable swing buy. If it stalls, the bulls will get out. Odds are we're going to remain in our trading range for the rest of the day. Unlikely to get a big reversal down, but we might get a trend up. I don't think we will, but we might. We have pretty good bear bars. So probably it'll remain sideways for the rest of the day. The top of this range, so you'll have fewer bulls willing to buy above bars, 65. Bears, double top, 55. Lower low double top. But with the 4 consecutive bull bars, I think a lot of bears will not sell below 66. Bulls, if it's a bear bar, they'll get out below. But if it's a bull bar, they'll hold. This represents a lot of the bulls scalping out, betting that the 2-hour trading range will continue. And you have some bears willing to sell, for example, sell above 65, betting that the buy the close bulls will get trapped. But as far as selling below 66, with the 4 bull bars, I'm not going to do it. What do you do? I did. I bought about 62 and scalped. I did not sell below 66 because of the 4 bull bars. So far, a good bar for the bears, but it's still at the bottom of a tight trading range. Had I sold 66, I probably would have scalped out. So this is the area where I'd be buying back my short and not looking to sell. This bar is becoming a surprise bar, pretty good bar for the bears, but it's right at the bottom of a 2-hour trading range. So I'm going to wait. I'm looking to short. I think it's enough to make us always in short, but I either have to wait to sell a pullback or wait to see a big breakout. 67, surprisingly big bear bar. Most bulls are not going to buy above 68. Suppose 68 is a big bull bar closing on its high above the moving average. Then I think the bulls will buy, but anything less than that, I think it's better just to wait. 3 bear bars, not many buyers above 68, but we're still in the trading range. Probably always in short, 67. Obvious magnets just below. The bears would like the day to close below those breakout points. Those were breakout points for the bulls, and the bears are trying to get the day to close below them. I am still holding puts that I bought up here. In general, if I think the market is in the sell zone and I have a very big bull day, that's the kind of day when I like to buy puts, because it's already extreme and it's in the sell zone. It's probably not going to get much more extreme. The downside of that is if it's extreme, it's extremely bullish, and it may not go up, but it also might not go down for several bars. So you end up having to hold the puts for a while, a lot of times. I'm curious to see if where the midpoint of the day's range is. Okay, it's right between these 2 lines. If you have a trend day and then you get a reversal, traders pay attention to the midpoint of the day. The bulls will feel like they accomplished something if they can get the day to close above its midpoint, and the bears will be happy if they can get the day to close below the midpoint. Because of all this strong buying for a couple of hours, even though we're reversing, I think the odds are against a big bear trend. Close of 2017, very important price all of last year. The market just kept going above it and below it and above it and below it. Will I buy here? Nope. If we go sideways for a few bars, I might buy. I'm currently flat. I did not take the short, and I did not want to sell too low. But and now we're back to support levels, and with this much buying, we're probably not going down very far. I mentioned last week that on the weekly chart, last week was a doji bar with a tail on the bottom. And I said sometimes if you have a buy signal bar that is a doji bar with the tail on the bottom, the next week you get a doji bar with a tail on top. So it's possible, although not likely, on the weekly chart, we could give back the entire gains of the week and create a doji bar this week on the weekly chart. I think we'd probably have to sell off 40 or 50 points by tomorrow's close, and that is not likely. You know, the ranges are shrinking. You can see it's paying attention to the close of 2017. Remember earlier in the day, I said we had a parabolic wedge, but a lot of times, even if it's going down, it goes sideways for 5 or 10 bars, sometimes for a lot of bars. This is a sell by close bar, but it's sitting right at support. So the math is not as good as it could be. You can see it went one tick below 69, and it's reversing up, paying attention to the close of 2017. It's still on the short. We have 4 bear bars, but I don't like selling at the bottom of a trading range. So I got trapped out when I missed the sell below 66. For the bulls, it's 2 legs down, 1 sideways, 2. But 4 decent bear bars, 2 of them good sized bear bars. A lot of bulls will not buy above 70, especially with it not closing on its high. It's still on the short, but I would get out of shorts above a bull bar, 1 tick above 70. And it's not strong enough for me to buy. So right now I have to wait. For the bears, a low 1, but bull bar 70, pretty good bull bar 70. I'm not going to take the short. We're right at support. And as I said, with this much buying, the odds are against a bear trend, and therefore the sell-off is a bear leg in a trading range. And we're at a reasonable bottom of the range. We're down into this zone that I talked about earlier in the day. So not a good location for the bears, but not a very good buy yet for the bulls. You know, that's the nature of trading range days. Nothing ever looks as good as you want it to be. 15-minute chart, which I don't really pay attention to. It's a 20 gap bar buy, 2 legs down, 1 pullback, 2, but a pretty big bear bar. Is it back to always in long? It probably is. The bulls might need 1 more bar. But most bears are not going to sell below 72 unless it's a strong bear bar. It has to erase the bullishness of 70, 71. Bar 72, the end of the 6th hour, bulls want a bull body, so they want 72 to close above the open of the 6th hour, which is the open of 61. They're hoping 60-minute chart, bull flag, and that we continue higher. It looks like we probably will go at least a little higher. Not today. The bears have pulled back to the moving average, but decent bull bar 70, 71. Probably buyers below 72, but if 72 is a bear body, a lot of the bulls will not take the buy, especially this late in the day, because they don't want to be scaling in the final half hour. We look at ticks. That sell-off around minus 800, pretty good negative tick reading, but trading range day, lower probability that we'll put in a new low, especially after a pretty good reversal up. 3 bull bars might be more buyers than sellers below 72. Bulls hoping to get a buy the close finish. They want the day to close up near its high, but we're in the middle of a 3-hour trading range in the top half of it, and a lot of the bulls will not buy up there. Just like when the market's near the bottom, 67, 69, a lot of bears stop selling and they buy back their shorts. And here, bulls sell a lot of their longs, take profits. Remember I said we may finish the day in this general area, and right now it looks like we will. outside up, but disappointing close for the bulls. 4 consecutive bull bars after 4 bear bars. Disappointing reversal up for the bear IOI. What do you do? I think it's going to be hard to do anything, so probably better to wait until tomorrow. 4 consecutive bull bars and support just below lowers the probability for shorts, and that big tail on top, and now possibly a bear bar, lowers the probability for longs. Middle of a 3-hour trading range, most likely will stay essentially sideways for the remainder of the day. I did not buy above 74 because of the doji 72 and the big tail 73 and the top half of the trading range. So I'm probably trapped out for the rest of the day. Usually if the market is sideways for a few bars at 12:45, it's not going to go very far up or down. Plus we're right in the middle of a 3-hour trading range, 4-hour trading range. So I'm going to not take any more trades. Limit order market. You can see they sold above a good bull bar after 5 bars up, made money, and they bought below a bear bar after a micro double top and made money. So limit order market. And I'd rather trade with stops this late in the day. And this is the opposite of a stop order market. So I'm trapped out. If this were earlier in the day, I might buy above 76 outside up. But now we have a 4-bar tight trading range in the middle of a 4-hour trading range. I think the math is not good enough. Better to wait for tomorrow. But late in the day for me to be chasing, I'm letting it go. Sometimes you get a buy or sell the close trend in the final 3 or 4 bars, and it can go a long way. But the risk is big, so you buy the close or you buy above the high, you're risking at a minimum to below 77. And remember I said the target was the top of 39. It's possible that we just stop right there. Anyway, I'm going to let it go. With a trade like this is you're risking 5 points, and even if you're right 60% of the time or 70% of the time, the one time that you lose, you'll erase 2 or 3 wins. You could always hold for a swing, right? And maybe 30% of the time you'll make 5 or 6 points, risking 5 points. But most of the time it'll only go up a point or 2 and then stall. Here, pretty good rally at the end of the day, and then we got that. So if we bought these closes, in a matter of minutes, you gave everything back, and that's real. It's a real risk. Another example: buy the close, and then 2 big plunges down, and then here, this is like today, breakout and quick reversal down. And then you got this, I have an example of something I want to show. This kind of thing where you have a very good bull bar and you think, oh wow, it's going higher. You buy above the high of the bar and then look, it trades below the low of the bar and you get stopped out. And then it goes right back up to where you wanted it to go. So the risk at the end of the day is real. Even if the probability is high that you make money on any one trade, if you take 10 trades and you average the winners and losers, the math is not as good because you'll get rare big losers, and one big rare loser wipes out maybe 3 good wins. Here's the 1-minute chart. I just want to make a point. You can see it's 15,000 contracts. In the final 20 or 30 seconds of the bar, you'll get another 20,000 contracts. You can see how big the volume bar is growing as we get near the end of the bar. It's typically the biggest volume bar of the day on the 5-minute chart, and the final 1 minute is the biggest volume on the 1-minute chart. You can see we're already up to 60,000 contracts in 1 minute, 70,000 contracts, okay, 90,000, 100,000 contracts in the final minute, okay, 100,000 contracts. And, you know, if you're a bull who bought the 77 close, you're thinking, oh, it's a buy the close swing up, right? You know, you held, it went up 9 ticks, and you held, and then it did that. What do? You have to get out and you have to take the loss. And if you don't do that, there's a risk that we can get 2 or 3 big bear bars, and then you can end up with a very big loss. So risk happens fast, especially at the end of the day. So something that looks good may not be as good, and you don't have time. If you print it out at the end of the day, everything is very clear. But real time, you do not have time. So, you know, if you buy the 77 close or above 77 and you see 78, almost certainly you have to get out below its low. And now you're already back to your original buy, right? And it just went above it, right? It's just really hard to trade it correctly. It's moving way too fast. You know, if you took your loss getting out below 78, would you buy again above 78, arguing outside up? Well, if you did, you'd have another loss, right? So really dangerous trading. It's entertaining, but I think very difficult to trade it profitably. If you're a computer, you don't get tired. But as a person, I get tired. So in the final hour, I tend to be more careful. I like having the option to scale into trades. You know, if I buy, I can buy more lower. If I sell, I can sell more higher. But in the final minutes of the day, I don't like to do that, especially final hour. I don't like to do it, but especially in the final minutes, because risk can happen very quickly, and the market can go against you, and then go very far against you, and you can end up with a very big loss, erasing, you know, a lot of the gains that you had during the day. Tomorrow's Friday. On the weekly chart, last week was a bull inside bar and a bull trend, a buy signal bar, but it's a doji bar, and the rally is unsustainable, climactic. Because it's a doji bar, it's a weak buy signal bar, reduces the chances of a big rally. And sometimes, if you have a doji buy signal bar, the entry bar is also a doji, so a tail on the bottom of the buy signal bar. Sometimes you get a tail on the top of the entry bar. Unlikely that will happen. Right now it looks, I think, reasonably good for the bulls. They're trying to get up to the November high in 2,800. It looks good, but I still don't think we'll get there without a pullback back to last February's low. Daily chart, we're trying to close above all of that resistance. The close of 2017 and the December high, the December crash high. The market crashed in December, and we're trying to get a close above it. And then traders will start looking to the next resistance level. These 3 highs are obvious. Less obvious is this price, the February low, important price. So it could be the middle of a move. This is obviously the bottom. If that's the middle, the top could be right there. But no credible top yet. Coming into the day, we had that rally from the FOMC yesterday. We ended the day with a tight trading range. And bar 2, bull bar closing on its high, possibly a pullback from 80, 81, a possible low of the day. Not high probability. You're buying in a tight range, but reasonable buy. And then 4 or 5 consecutive bull bars, 5 closing on its high. We're probably always in long, and it's probably buy the close. Bad follow through 7, bad follow through 8, bad follow through 11. But a bull micro channel, no pullbacks, no sign of a top, no reason to sell. So you're either buying or you're waiting for a pullback. 13, failed breakout above everything. The 2017 close, the high of yesterday, the December 12th high, but a 10-bar bull micro channel, probably buyers below. 14, a high 1, but 2 dojis might be sellers above, and there were. Micro double top, 13, 16, big bear bar closing on its low. Minor reversal, more likely than a bear trend. even though this is a buy climax, it's a sign of strong bulls. We have two dojis here and only a single bear bar, probably minor reversal and sideways. And then 18, we went outside up, theoretically a buy above its high, but two dojis, not great. And then 21, we have a bull II, consecutive inside bars. Theoretically, bears will sell below for a double top, and bulls will buy above for a bull flag. And it was a buy above 20, it triggered, and then we ended up with a buy the close rally here. 26 consecutive bull bars, you can say 4 bull bars, 2 of them closing on their high here. It's probably buy the close. 29, a bigger bull bar. It's hard to see, but it is bigger, and that's always a concern when you have a buy the close rally. If the bars start to get big, you're usually reaching a buy climax, and there's probably not much left to the rally. We'll probably start going sideways to down, and that's what took place over there with 28 and 29. Let me zoom in a little bit. The bears, 30, whatever that is, 8 consecutive bull bars, maybe, probably buyers below 30. And I said the tail on the top of 30, not a good buy the close bar. But there were bulls above the 30 close and the 29 high. They saw 31 and they said, this is a buy climax and we have a big bear bar. I'm going to get out of my longs. And when the market on 32 went back up to where those bulls bought, the 29 high, the 30 close, they sold. That tail is bulls giving up and bears selling. Bears thought it's a bad high one above 31, and they sold. They thought the bulls who bought the 30 close would be disappointed, and they expected those bulls to sell, so they're sold around there as well. Then we got 3 bear bars, 35. It looks like an endless pullback type of situation where it's a bull flag, but it just keeps going down. You got a high 1 or a high 2 at the moving average, 37, but 4 consecutive bear bars and a pretty big bear bar, 36. I would wait for a second buy signal. We got a surprise bar down, 39. Exceptionally big surprise bar down. We're probably always in short. We'll probably, at a minimum, get a small second leg down. The bulls got an II, 41. Not good for the bear. Probability of a big bear trend, increase the probability that would be more sideways. The bears got a micro double top, 46, outside down. It could be the start of a second leg down, but we got a lot of bull bars here. Looks like it's probably going to be more sideways than down. 450, a new low of the day. We were expecting a second leg down at 39. This would qualify. It's a high 2 with 40. It's a smaller high 2 with 47. I think it's an okay buy, looking for a swing up. We might get up to the 39 sell climax high. We might get up to the 46 high. I suspect we're probably going to get into a trading range, which we did. 56, a double top bear flag. 46, but 3 consecutive bull bars, tight channel, probably a minor reversal in a trading range. 63, we have a bull inside bar, but 62, 63, tail on top. Not a strong buy, but for the bulls, it's 2 legs down, 1 pullback 2, and it's a higher low above 49, so it's possibly a pullback from this breakout. It's a credible buy. Good bull bar 65, but then the bear bar 66. The bears now have a double top 55, 66, and a decent bear bar, but 4 bull bars. That lowers the probability. Surprise bar down 67, probably going a little bit lower, but with the strong buying we had early in the day, it's unlikely that today could become a bear day. So the best the bears probably get is a trading range, and we're probably near the bottom of the range. Therefore, selling below 67 or below 69, not high probability, plus risk is relatively big. 70, reversal up from the close of 2017. That price was the most important price all year last year. We oscillated around it all year, but we have 4 bear bars here. So yes, high 2, 62, 1 pullback 2, high 2, 40, 1 pullback 2, but 4 bear bars. Probably better to wait for 2 or 3 bull bars to buy. 71, we might be always in long again. We have consecutive bull bars and now closing on the high. and 72 bull bar. So the bulls would buy above the IOI 74. But what do you do with 75? Micro double top, lower high. You probably have to get out. However, we went outside up 76 and then a big move up, and then we're just chopping around up here at the end of the day. Let me do that. Buy stop entries. You can buy above 2, maybe above 4, but definitely above 5. 6 is a pullback, so it's a buy above 6. Same with 8 and 11. Bull micro channel. I like to buy above bull bars closing near their highs, above 5, above 7, above 9, above 10, above 12. And then here, what do? Do you sell? Below 16, the double top, buy climax? I would not. Bulls would buy above 21, above 23, 25, 26, maybe 27. Now 28, getting bigger. 29, a bigger body still. So it's getting riskier. It's still buy the close, but disappointed bulls. 30, 31 would get out around break even. Stop entry bears, can they short below 31, micro double top? They might. We're probably not going a lot higher without pulling back to the moving average. Can you sell below 36? No. Can you buy above 37? A 20 gap bar buy, a high 231? I would not. 4 bear bars. And then we have the bull II on 40, 41. So theoretically it's a buy, but the tails make me think we're going to go sideways rather than down. For the bears, they have a big outside down bar, 46, and a low 2, 41. And we should get below the 39 low. I don't know that we'll go below these support levels. I doubt that we will. So it's a short below 46, but probably not going down far. It's a buy above 50, above 53, 54. Theoretically, it's a double top bear flag, 56. So it's a sell below 56. I did not sell 56, 57. I would not sell 61. A bear bar closing on its low, but look to the left. We're right above prior lows, and we're at the bottom of a trading range. And then 62, 63, it's a buy, but does not look good. 65, theoretically it's a buy, but look to the left. We're at the top of a trading range, so it's the opposite of 61. I don't want to buy there. For the bears, some bears sold 66. I would not sell 67 or 69. The bulls, aggressive bulls buy above 70, above 70, maybe above 71, maybe above 74. But really difficult to hold long with these big bear bars closing on their lows. Traders can see that we have a lower high 66 and sold off. We have another lower high 75 and a micro double top. We could sell off. The math is just not good. You can print it out and convince yourself that you would have traded it properly, but the odds are you would make enough mistakes in this kind of environment so that you would lose money. So not worth it. Buy the close all the way up from 4 or 5, all the way through 14, and then again starting with 24, 25, or 26, and 29 is buy the close, so it's 30, but I would not take those. Sell the close 39 if you can put a stop above 39, looking for a second leg down, a new low, which we got. And then all this trading is trading. I don't want to be buying closes near the top. I don't want to be selling closes near the bottom. It's a trading range. The computers will do the opposite. If they see a bull bar closing up after several bars up, they'll sell and they'll buy bear bars. So they'll buy 48, 49 close. They'll buy 58 close, 61 close, 67, 68, 69 close, and they'll sell 53, 54, 55. They'll sell 64, 65 close, and they'll sell up here as well. Limit order trades. The easiest one of the day was buying the 13 low. We had a 10 bar bull micro channel, maybe 13 bars, or maybe 11 bars, but the odds are very high. There'd be buyers below. 31 high. I think probably sellers above a buy climax of bear bar, parabolic wedge. And 37, it's a buy signal, but probably sellers not far above. 41 II, consecutive bull bars, probably buyers below. 45, a bear bar, probably sellers above. And then all of this is limit order trading. Buying below bull bars near the bottom, selling below bear bars near the top. Buy below 51, sell above 58. Buy below 72. Do you sell above 75? I don't know. Limit orders this late in the day. I don't want to do it. Hold on a second. Question: could you go over your trades today? Please include stop management and freeze trade. No, I would just get exhausted. I can't even remember all the trades that I took. But the trades, I already talked about a lot of the ones that I took. The kinds of things that I'm looking to do, I did buy above 2, stop below 2, and here I typically try to buy above the high of bull bars. So like buy above 5, stop below 2, buy above 7, stop below 2, but I'm not going to let the stop get hit, and then above 9 and 10 and 12, buy below 13, stop probably below 9, but I'm not going to let that get hit. And then here, buy above 21, and then here, buy above 25, 26, maybe 27, 28, but 29, the bars are getting bigger. I'm not going to do that. And then selling, I start to look for limit order sells. I think I sold 31 high. Down here, I sold some things at the market. I bought some things at the market. I sold 39. I think I sold it a couple times, once in here and then once somewhere in here. 50, I think I bought it. I bought 62. I bought 71, and I think that was my last trade. And I took many other trades as well. I may have sold 67 right before the close of the bar, but I don't remember. We were always in long. Probably when we went above 2, but certainly by the close of 5, I would get out below 16. I would get long again above 21. I'd get out below 31 and possibly short there. Would I get out above 37? I would not. After those bear bars, I would not. But I would get out above 40 or 41. And then in here, it's a mess. Theoretically, sell below 46, buy above 50. And I would not sell below 56, but you'd have to sell either below 57, maybe. I don't like it with the 3 bull bars. I would buy above 62. Theoretically, you sell the double top 66, but the 4 bull bars, not great. And I'd get out of shorts above 70 or 71 and either buy above 71 or buy above 74. I would get out below 75 and not do anything in there. Question: how did you transition from being stressed to the ease with which you trade today? You know, I wish I could put that into words. You know, I was probably the most, you know, different traders handle stress differently, but in the first 5 years especially, I was incredibly stressed, desperate to make money as a trader, desperate to figure everything out, and just ripped up inside because all the stuff I read in magazines and books were telling me to do something. And when I look at the charts were telling me that all that stuff was wrong. And then, you know, as you start out, you know, you have to deal with being hopeful. You know, so when the market starts to go up, you want to buy, and you hope that a trading range is becoming a trend. So you end up buying at the tops of the ranges and selling at the bottom. And when the market's going up big like this, you're constantly looking for reversals because you believe it's overdone. So I was doing everything opposite. And then over the years, eventually I just started thinking differently. And you know, now I have a good sense of what the market is trying to do. And I try to do the same thing. I don't try to fight it. You know, if the market's going up, I want to buy. If it's going down, I want to sell. If it looks like a rally is weak and a bull leg in a trading range, I'll start selling above bars. If a sell-off is weak and it looks like a bear leg in a trading range, I'll start buying below bars. And you know, I just got really comfortable and peaceful. You know, I have a very high degree of confidence in my ability to understand what the market is doing, and that makes it very easy to be peaceful. Nothing surprises me. I've seen everything 1,000 times before. You can just look at my PowerPoints. I have lots of examples of just about everything that the market can do. So so I've seen everything, and so I'm just really at peace when I'm trading. A question about AMD. They had a good earnings report, and they're up pretty big. Anyway, a question: AMD daily was bearish going into the earnings 2 nights ago. A bear bar closing near its low right here. Okay, had a huge gap up yesterday and followed through today and trapped the bear, and the trap bears are getting out. Have you looked at fading extreme emotions going into earnings, possibly using out of the money options? No, I don't really pay attention to earnings. If you watch Options Action, they love earnings season. They love to make bets on earnings season, and I don't think of it that way. I just look at the charts, and if it looks like the market's going to go up, I'll buy calls. If it looks like the market is going to go down, I'll buy puts. And I don't pay attention to earnings. This is kind of a pattern. We have a big bear day, and then the next day is a big bull day, and there's very little overlap. Here, there's no overlap. That's a very bullish type of pattern. Here we have a big bear day, and the next day is a big bull day, but they overlap a lot. So the bears were able to get out as this bar was forming. Here, the bears were trapped immediately on the open, and they're desperate to get out. So when you have a big bear day like that, and then a gap up and a big bull day, that is especially bullish. But I don't pay attention to earnings. I just look at the charts, and like I said, I place orders based upon the charts. I usually buy too few calls or too many calls, or if like December 24th, I mentioned that the market was probably almost certainly going to go up, and it was probably going to go up strongly enough to make traders believe that the bear trend had ended and the bull trend resumed. And I bought calls early on this day, whatever day that is, the 26th, the day after Christmas. And I never buy as many as I want, and sometimes I buy too many at the wrong time. But you can never get it just right. All you can do is try to do things that are reasonable. I bought puts today. The 2-day breakout here is strong enough so that we'll probably get a little bit more up, but I don't think we're going to go a lot more up before we pull back. We have a potential final flag here. I don't know that we're going to come all the way down to last year's trading range low, the February low, but I think we will. We have a big magnet up here, a triple top, and I think we will get there. But right now, well, at least prior to today, I thought we were going to trade down and then get there. However, we're getting very close to it, and we may simply go straight up there. Still a wedge, 1 pullback, 2 pullback, 3. We had a parabolic wedge, 1 pullback, 2 pullback, 3. And I said at the time we may just go sideways for 5 or 10 days and then resume up, which is what we're doing. But I said it's also possible that we'd go sideways 5 or 10 days and then correct down. Parabolic wedge, exhausted bulls, they usually stop buying for 5 or 10 days and then see what the chart looks like. And it looks like they decided to buy double bottom bull flag. But no, in general, I don't like to buy out of the money options. I don't like to buy in the money options. Out of the money options, the reason why buy out of the money, what he means is this. Let me put Spider, for example. Okay, Spider's at 269, let's say 270. And out of the money option would be a 275 or a 280 call. And the reason why traders would do that is they're thinking, I don't want to buy at the money because it might cost $5 for a call. But if I buy out of the money, like a 280 call, it may only be $2, right? And you say, okay, if I buy it for $2, I have less risk. What does that automatically tell you, right? If you're choosing to prioritize risk, you're paying for it with probability. Low risk trades lose most of the time. So the further out of the money you buy, yes, the risk is less because the puts and calls are a lot cheaper, but the probability of making money is less as well. So you're taking low probability bets, hoping for an occasional home run. And one of the problems with that is when you get that occasional really good trade, if you don't make every penny possible from that trade, if you don't manage it perfectly, you're not going to make up for all the losing trades that you've had. So whenever you take low probability trades, you have to win big on the few winners to overcome all of the losers. And I think that puts pressure on you because, let's say you take a trade that has a 30% chance of success and you just lost 7 consecutive trades. The odds are you're probably going to win. On that one trade, you're probably going to be thinking about the 7 losers, and you'll end up taking quick profits to offset 1 or 2 of the losers, when in fact you have to trade it correctly and hope for a home run that will erase all 7 losers. And even though it sounds reasonable, it sounds like you can do it, it's hard to do. If you just lost 4 or 5 times in a row, it's hard to hold on to a trade and get a small profit, hoping that it will become a huge profit and erase all of those losers. On the other hand, if you take high probability trades and you lose once or twice, you know that you're going to win a whole bunch more, and you'll probably pretty quickly offset the losses. One of the problems with high probability trades is traders often manage them wrong. They use wide stops and do not get out before the stops get hit. I talk about that all the time, that if I'm buying up here, yes, right here, okay, and I see a bear bar like that, I'm getting out below that bear bar. If I'm a scalper, I'm getting out below that bear bar. If I'm a swing trader, I'm putting a stop down here, right? This tested that low, but never got below it. So, but if you're a scalper, to get high probability, you have to scalp. There's no way you can be a high probability swing trader. A swing trader is making big reward. Big reward tells you good risk reward, and that tells you the probability is low. So if you're a high probability trader, you're a scalper. And if you're a scalper, you cannot let the market go much against you. You can use a wide stop initially, but if I get a bear bar closing on its low and I bought, I'm going to get out and take my loss. All right, I'm losing my voice. Overall, now we might get a higher high major trend reversal, wedge 1, pullback 2, pullback 3, pullback 4, or 1, pullback 2, pullback 3, and a higher high major trend reversal. 60-minute chart, we have a potential big final flag here. On the spider, that's around 264 or so, and I have my puts up in this area, expecting it to come down here, but knowing we may go up higher before we come down here. But I do expect us to come down here. Okay. Bulls trying to get resumption up after this, but this is a good candidate for a final flag on the 5-minute chart. And on the 60-minute chart, this is a good candidate for a final flag. But no credible top yet, so we still may go higher. I just don't think we'll go much higher in the next few days. And I think within the next week or two, we'll start to pull back on the daily chart. Okay, hope everybody has a good night.